Hey everybody, it's Nick Inman, founder of VolumeProfileTrader.com on Tuesday, March 12th, and haven't made a video in a few trading sessions. And what we're looking at here is the S&P, and the reason why I really didn't give you a video over the past couple of days was because we haven't had any news Monday or Tuesday, so kind of be relevant. And you can see the market. Okay, Monday it made new highs, which is just expected, right? But we really haven't gone anywhere. There hasn't been any, important swings in the market. The market's doing what you would expect it to be doing, which is basically trading in a range with an upside bias, because that is the trend. So what we're looking at here is the end of the week, the second half of the week, and we have some decent news days coming up. So something that I'm starting to use more, which I haven't, is ForexFactory.com for my news, and the reason why is because we've kind of turned into a global market, and if you trade currencies, especially, this is definitely useful. But it just gives you a good global view because, for example, the euro, from a day trading standpoint, the euro has been absolutely fantastic over the last, call it 2 months or so, maybe even longer than that. But whereas, the EES, the ES being S&P, or any other, equity future, it's a lot slower. You've had a few days. We had a good couple weeks, maybe 2 or 3 weeks ago in a row, and that was good. But this gives you a better global view of the news, and maybe some trading opportunities in the European market, or maybe like the yen, something along those lines. But tomorrow we have retail sales, and we have import and export prices all at 8:30. At 10 we have business inventories, and at 10:30 we have crude. So if you're a crude trader, tomorrow should be a pretty good day, at least post 10:30. So we'll have to see. And then you have your treasury budget at 2 p.m. Not saying that that'll do anything, but just kind of pointing that out there. Alright, back to the ES. What we're looking for is, so hopefully some movement tomorrow, but nothing's really changed. You still want to kind of play this market to the upside. You want to take what it's giving you, and the trades have actually been decent both yesterday and today, if you caught the decent trades. So that's probably a little bit of a contradiction, but nevertheless. NASDAQ, this has been a little more range bound, but you can see we have our lows around, call it 2790, or highs around 2810. Pretty tight range, less than 1% in the last week or so. So you should expect some type of breakout one way or the other on that. So just keep that in mind. One thing else to put out: Thursday we have jobless claims and PPI, Producer Price Index, and Friday, which is probably the best news day of the week, we have consumer price and Empire State Manufacturer at 8:30. Treasury International Capital, I'm really not sure what that is, to be honest, at 9. And then we have industrial production at 9:15 and consumer sentiment at 9:55. So those are some good news pieces that could really help shift this market. So NASDAQ doing what it's doing. Something like Google has helped the NASDAQ continue to outperform, while obviously something like Apple has lagged. Apple, however, and I just want to point it out from a trading standpoint, you have your low here at 419, and then you had a nice little higher low here at, I guess the buy would be around 429, so that's around a break even right now. Went in positive territory just a bit, basically touched the current month-to-date highs and has rolled over since. So if it doesn't perk up soon, you can get out of that Apple long, because the thesis would be kind of broken, and the thesis is, or would be, at least a retest of the value area low, which is 440, or ultimately the point of control for last month, which is 450. If you want to draw some Fibonacci's, that's fine too. I'm just going to draw it from these recent highs, and you can see, you know, the 21-23 retrace zone that we talk about and members know about. You know, that's been a little bit of resistance. We popped above it, but only to fail back under, or excuse me, fall back under. So keep that in mind. Goldman Sachs, this is a little bit of a speculative short, and I'll show you why we got into the position. You had your little pullback here, which means really nothing. We're in an uptrend, right? It means nothing. It's the retest that matters. So let me get rid of this. So you had your pullback, and this is not a retest. A retest is, you know, you come down to support, then you test support again, which you can see it better right here. So we come down in a smaller time frame. You know, you have your little low here, and then a little breakout. That's a good like day trade sort of thing. And then we retest it on Friday. We consolidate, and then looks like Monday we break out to the upside again. You know, higher lows here, and then eventually on Friday we have that turn, and that turn gave us a little bit of a divergence where we saw, okay, S&P makes new highs, even the XLF doing good, but Goldman Sachs, what do we have here? We have the making of a lower high, and now and that lower high was confirmed when price dipped below this balance range here, which it did on that bar. We consolidated sideways on pretty light volume, only to fall again. And we'll see if this can continue. You know, you have support eventually here, and remember, it isn't an uptrend, but this is something that we could retest the mid to high 140s, and we have a put spread on this, which is trading around a break even right now. So I may have not picked the right strikes, which will be kind of frustrating if we do get some type of move down, just wrong timing or wrong strikes. However, this is something that you want to keep an eye on. You know, this is all we're looking for is opportunities. Using median lines, you'd be looking for a test of around 146 or so to take profits. So we'll just leave it at that. I want to bring up the euro. You know, this is important. Understanding, you know, when the euro or when a stock is balancing and when it's trending. This has been trending down overall. You can see we've definitely pulled back. This is different than this, and you know what you're seeing here is something that's in consolidation. You know, until this low is breached or this high is breached, you can assume to play the ranges. You could probably be two-sided on this, but there's no doubt about it. You know, the bias is to the downside, and this exponential 144 moving average on this 2-hour time frame has been an excellent level to trade off of. As you can see, I'm just going to point out the last few times where it's mattered. Here, there's a good bounce. Here, good bounce. Here, good bounce. Fails, retests, holds it for a little bit, ends up failing, fails. So here we are again, fails. You know, just watch it. Keep an eye on it. Realize this is your trading range, and don't make it harder than what it is. I think something similar. Yeah, it's similar on gold. You have this extreme spike to the downside, this extreme spike to the upside, and then you have this higher low here. So again, you just kind of play the ranges, and you know right now it's trying to make its way higher, but overall we're still struggling, you know, alone with last month's value area low. So you want to keep your eye on that and realize that this thing, you know, we have some momentum to the downside. We could be forming a base here. Which I didn't tell members, which, you know, is fine. I don't always do that. I had a call spread on gold GLD 153 by 155. Took those off today for like 50% gain or something. Small little gain. But the trade setup, I'll give you the trade setup and what I was looking for. I'm going to go to GLD so we can see it. So let me bear with me 1 second. The trade setup was similar to Goldman Sachs, but on the other way around. We had our low. We had our nice spike to the upside. It even cleared this gap here, so that was a bit encouraging. But this was, this was clearly our low. This was our base, and what happens? We come down to test that on the 6th. We have a good engulfment here. We have a good volume. We got long at the money, 153 by 155 on the spike up today. Took the trade off. Good trade. Move on. That's it. Alright, so overall, you're looking forward to what the market has to bring over the next couple of days. Should be good opportunity for day trading, so keep that in mind. The trend in this market obviously remains up, but, and this is, I think this is a pretty important point. Take something like the Dow, and this probably works out better. I'm going to zoom out a little bit. Look how parabolic it's gone in the last, alright, we had, this was, and this is called Chase for Performance. This is, epic right here. You get this gap up. No one, okay, you see the big volume spike. That's probably end of year books, whatever you want to call it. The next day, another spike up. When we can't, hold, or excuse me, drop down into this gap zone and this bounce area holds and we continue to move higher, that's people buying, and they have to catch up. They're trying to buy this market. Again, we have consolidation here. Ends up being a shakeout or an opportunity, and we've seen this move higher. But indices tend not to be able to hold these parabolic moves, so I would expect this market to pull back, for example, the DIA, the diamonds, back down to 140, which is a decent, 3% pullback. The S&P, it looks a little bit different. It's not quite as strong the past few days, but, you could easily see, well, let me get back to the 2-hour. Bear with me. Alright, here you go. There would be nothing wrong with retesting 1535, which is obviously a pretty small pullback relative to where we are, but the value area high from last month, 1521. The point of control for last month, which is already overlapped, so I wouldn't put too much emphasis into it, but around 1510 or so. That would be a good pullback where you would look to say, okay, are the buyers going to come in and try to push this thing higher again? One thing to note is, and I do this pretty much once a month, point of controls. This was the ultimate buy back here, back when that market had that spike down and then the huge gap up. That's what you're looking for there. You get the great buying. But this point of control for December left untouched. That's very important. Markets like to retouch point of controls. This point of control for January left untouched. And February now, we did touch that one, so we're good on that. So just keep that in mind. At some point during this year, I'm almost positive that we'll retest 1460. So 1460. So keep that in mind. That's a 100-point S&P drop. That's not saying that the market won't go higher than 1551.75, but it is saying that there will be two sides to this market. I doubt it goes parabolic and just continues to go to the upside, unless if you have some extremely positive economic news. So anyways, take care, have a great one, and I'll talk to you next time.